Hello ICT traders, you're welcome back to the channel. This video is about ICT market structure. What I will be doing in this video is to actually simplify market structure for you as a complete beginner. I'm going to show you how to properly mark out structures and how to identify trend in this particular video. If you are new to this channel, you're welcome. This channel is completely dedicated to beginners. If you are a beginner in ICT concept, I'm making a sequential arrangement of every lesson that will help you to become a professional trader in this particular YouTube channel. So make sure you subscribe and remain updated with all the videos that will be uploading. So let's get back into explaining what is market structure. So if you've ever tried anything about ICT, there are basically three things that happens every time price is moving from one point to another. It is either price is moving in an uptrend, or it is moving in a downtrend, or a consolidation. So these are the three things that you will always see in the market, and I represented all of them right here. I'm going to start with this sketch, and then I'll go back to the chart, and then we will do a practical session right there. So what exactly is structure? Every time you look at your chart, for instance, these are the things you will see. The movements is what we call structures. The movement is what we call structures, and that is exactly what I'm trying to explain to you in this video. So as price begins to move, it moves like somebody traveling from one point to another. It moves from this level to this level and then rest a bit, move again to this level, rest a bit, move again to this level and then take a rest, move again to this level and then take a rest. That is exactly what price is doing. As price moves from here to this level, it rested to this area. This first move from here to here, we call it a structure. From here to here, and then the retracement, we call it a structure. So this is what we call a structure. As we move above this place, bridging above this level is what we call breaking of that structure that we have just created. From here to here, and the retracement is our structure. That is why we call it a trading range. Just take it like this. The boundary between this movement, including the retracement, is our structure. So every time we break above it, we call it a break of structure. And this is what we call an uptrend. As far as you see this moving in an upward direction, it is an uptrend, because an uptrend comprises of higher highs. The moment we are making more higher levels than the previous one, we call it a higher high. So we keep moving, creating new highs, creating new highs. Even the retracement is also creating a higher retracement above the previous one. So bridging above the first level it reaches, we call it break of structure. It moves again and then created this movement. Okay, imagine somebody, let's say a motorist, for example, moving from here to here, takes a rest and then bridges above his previous record. This is break of structure, creating a new one. And then retracing back to rest, bridging above his previous record, and then taking a rest. This is the range now. Moving above, breaking his previous record, break of structure. Moving again, breaking his previous structure, creating a new high. Okay, so as price keeps moving, bridging above or breaking his previous record, this is what we call a break of structure. If we keep moving like this forever, then we have an uptrend forever. But that doesn't happen in the market. There is nothing like an uptrend forever. Market moves in these three directions. If it moves upward for a while, it moves downward for a while. Forget about time frame for now. I will teach you about how to bring in time frame into this subsequently, but let's deal with how to identify structure. And now if you are identifying structure, the first thing you should know is that it is the highest level, both the body and the wick, that you will mark as the record. If I go to the chart, I'm going to show you what I mean by that. It is the highest level you're going to mark. Let's see if I can see one. Okay, let's say for example from here to here, we can actually see this is the highest level that we are breaking above. Just an example. I'm not supposed to come here, but just to give you an example. So this is what we call the highest level. In identifying structure, you identify the highest level. But in breaking of that structure, even though this is a market structure shift, I will show you that. But in breaking of that structure, you want to see the body of the candle closing above the highest level. Okay, so this is what we say. This is the highest level we identified from here to here. Okay, and then this is the breaking of this highest level. This here, can you see the body of the candle completely outside of that level? The body of the candle, if it is only the wick that closes above, it is not a break of structure. We have to see a body of the next candle closing above this level before we can call it a break of structure. For instance, this is not a break of structure. Let me show you. Can you see this is another higher level? This is not a break of structure because we only have the wick of this candle closing above. But if we extend it to the next area right here, we can actually see that we have this candle breaking above the level here. You can even bring it here. It's all the same here or here. You can actually see that we have broken above this level with the body of the candle. Okay, so that is what I mean by identifying with the highest level. So in identifying structure, this is the structure, the movement from here to here, and the retracement. This motorist, or what we call a biker, remember the example I'm giving you, he moved from here to here, let's say 200 kilometers, and he rested. Okay, he reduces his acceleration and rested for a while, and then broke the record he created the last time, moving 250 kilometers, coming back. So as we keep moving in an uptrend, we will reach a point that we'll have to come back and change the direction of our movement, and that is where we start a downtrend. For a downtrend to start, we need to take the last higher low that was created. Can you see? In an uptrend, higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So we are going to put a guard. What I mean by that guard is that we're going to look at the higher low is our very indicator of where the exact shift in market structure is going to be. Okay, so look at this. This was the last higher low that price created after breaking this structure. Remember, if you're trading, you are not seeing the future. You are only doing what price is showing you. So this was the last higher low that price created, and this is our indicator now that if we take out this guy, we are no longer in an uptrend. That means price is trying to start a downtrend. So as soon as you see price crashing below it and closing below it, that is when we say we have a shift in market structure. Remember, this is not break of structure any longer. This is a market structure shift. And then we start a downtrend. And what is a downtrend? A downtrend simply comprises of lower low and lower highs. Can you see? Lower lows and lower highs. Can you see these things happening? And lower highs. So this is the very basic of this thing. Now, as price begins to move, breaking the last record, resting, breaking the last record right here, resting again, breaking the last record, resting, breaking the last record. And look at this. In times of changing from downtrend to an uptrend, we need to also beat the last level, that is the lower low that was created right here. This is our indicator, or our guard right here, this guy. So once we take him out, we close above him, we have a shift in market structure back to an uptrend again. Can you see? Moving to an uptrend, coming down to rest and moving up. I hope this is explanatory enough. And then what exactly is a consolidation? A consolidation is when you see price just accumulating order within two bounds. This one moving within just two boundaries, you have several touches across this area. So this is your definition of consolidation. You see this happening time and again, time and again, time and again. So that is how you identify structure. So let's go and do practicals now. So this is a complete chart. I'm not going to look for somewhere very definite. I'm just picking it randomly. So look at what happened. Let's start from here. Okay, let's start from here. Price moved from somewhere here down to this area. So let's start from this downtrend and see where it changes to an uptrend and see everything. So look at this. Market is moving, coming down. We had this shift in market structure. It starts from here. So this is a shift in market structure. We are no longer in this up movement. We have shifted market structure right at this level. Remember, if you are identifying, you identify the week, the lowest level this time around, not the highest level. That's exactly the opposite of what I showed you. The lowest level, including the week, that's the week. And now we closed below it here with the body of the candle. We closed below it right here with the body of the candle. And that is exactly what we call a shift in market structure. And then we continue from there. Where is the lowest level? This is the lowest level I'm seeing right here. Okay, that is a break of structure to the downside. I'm dealing with a downtrend now. A break of structure to the downside. We moved. Look at this. And let me show you something, guys. Let me show you something very important. If you're looking for a retracement, look for at least 2 to 3 candles that will close above the wick. Can you see? You need to see this candle, at least the body. Let me just say the body. 1, 2, 3. Can you see the body is moving higher than the other ones? So this is a retracement. Once I have 1, 2, 3, the body is closing above this other body, moving up to this level, I have a retracement. Okay, so this is not a retracement to me, this place. So somebody may be tempted to say this is a break of structure. Let me just adjust this drawing. This is a break of structure, but it's not a break of structure to me because I'm not seeing at least 3 candles that are in series taking out the bodies or the highs of the previous candle. Because look at this, just some kind of a range around here. So I'm not seeing a retracement, so I consider everything as a downtrend here. Okay, so it is not a break of structure. This is where the break of structure happened, right here. I hope you're learning something really definite here. Can you see? This is where the break of structure, body closing below the area we just marked. And for a retracement, we can actually see that we have 1, 2, 3 candles at least that are printing higher highs, and we keep moving. So that is a retracement. Look at this. Is this considered as a retracement? This place. Can you mark out this place as a break of structure? I'm not seeing 3 candles at least. You can only see just 1, 2. These ones are just, what we call rejection block within the area. So this is not a retracement. I hope you are getting this in a very simplified term. So let's look at this. Can you see this movement? Where is the break of structure happened? This is a complete retracement. So let's look at the lowest level that price printed, this place, and bring it to this area. Where did we have break of structure? Now this is where the test comes. Is it this place? No, there is no break of structure here. Is it this candle? It's not this candle. This candle was the one that created a break of structure. So this is a break of structure movement from there. Another movement, this is a retracement. So let's look at the lowest level, this place, bring it to this area and watch it out. Did we see a break of structure at this area? No, this is not a break of structure. This is not a break of structure. This candle, this candle, guys. This candle, a breakout structure. As little as it is, we have closed below the low. But what I want you to do, whenever you see this kind of scenario, or whenever you see this kind of situation and you have this kind of week, you can take even this one to be your lowest level. Okay, this can be your lowest level, just for you to have an easy identifying of the lowest level after it moved. This one can be your lowest level because of this kind of chunky movement, and so you can have an idea of everything happening. And then price never closed. Look at what happened here. Price pushed and created another low. Even though it did not break structure, I will move to this level. So this is my low in this regard, because I can see retracement coming in. So I broke below this area. Now other people will look at it and say, this place, you see, this movement is just grab of liquidity because we have a shift in market structure, but you are not seeing the future. Everything here did not happen. Did not happen. You had a break of structure. In fact, you can even take trade because you see this break of structure. You can actually see an order block. Even though I did not teach order block in this YouTube channel, you can see fair value gap right there. As price is coming back, you can decide to sell because you are not seeing the future. Except after it has happened, you are not seeing the future. So we have this movement. This is where our break of structure happened at this exact point. So now this is where shifting market structure comes in handy. Remember, we started tracing the break of structure right from here, and now we have some way that price took out the last high that was standing as our guard. Price took it out, closed above it, and this is where we have a shift in market structure from this downtrend, to an uptrend. This point, we have an uptrend right here. Okay, this is where we have a shift in the directional bias. So look at this, moving break of structure, retracing down to this level, another break of structure right there, because I consider all this as just a retracement to me. Okay, to some people, they will just put this right here and say this is a break of structure, but it's easy for you to get manipulated if you focus on those ones. Focus on major levels so you will not get burned in case you make a mistake. Okay, so our break of structure that happened at this point, another one here, right here, break of structure that happened at this exact point, and then we have this one right here, break of structure that happened at this exact point, showing you everything in detail. Another area here, let me show you. We keep moving, guys. Another area at this level, break of structure at this point. I'm seeing this clearly, so that is another break of structure. But right after that, remember the last level we have was here, this place. The last level we have was here. So price crashed into it, and we have a shifting market structure, guys. We are no longer in an uptrend. It's a shifting market structure. We are no longer dealing with an uptrend. We are back to a downtrend, and that is why you see price pushing. After this one, let's see, did we break this level? Yes, we have broken below this level. So we are currently in a downtrend. I hope this is explanatory enough. So once you understand this, you will be able to mark out your structure clearly well. Okay, so let's check what exactly is this range, or where we can see a range. Let me just see if I can see a range. Okay, look at this price movement. We had this movement just in between these levels, between these two levels. Okay, it's not some kind of an exact and definite thing. Price is just moving in between these two levels until at this point where we have a breakout side of that level, breakout side, and then price decided to do another range here, another range here. This happens because institutions are actually accumulating order enough order before they move liquidity to another level. You're going to see range time and again. All these ones are range. They are neither uptrend or downtrend. Okay, these things. If you're watching up to this point, guys, make sure you subscribe to this YouTube channel and make sure you turn the bell notification so that every time I make post, you're going to be the first person to get videos from me. So I hope this video is explanatory enough for you to learn about market structure. This is to the very basic, making sure that you learn it to the very basic, guys. Let me know if you have any question in the comments and I will be there to answer the questions. Thank you guys for watching. See you in another video.